Avanti Feeds, Mr. Alluri Indra Kumar of the company joins us right now on the show. Good having you, Mr. Kumar. Thanks so much for joining in. You know, we were doing this small analysis about a month ago about the fall in prices and the rising shrimp feed cost, which could be eating into the margins of companies like yours and maybe some of the others. Is this a real and present problem, or is this something that will, or even if it is there right now, will go away with the passage of time?
Yeah, it is a temporary effect, and it actually in the beginning of the year, for 2 months, there was a sluggish demand for the shrimps in the US market because of the climatic and weather situations. And now the demand has slowly started increasing, and also the prices were very high the previous year, and so the prices are getting adjusted of the shrimp, and now it is slowly increasing and the demand has grown up.
Okay, so you're saying that it lasted for what, April or month of May, and in June has been seen a better month?
Yeah, slowly it is May, June has seen better months because as per our company perspective, we have good orders, and even the prices in the beginning of the year were very low, and now demand was low because supplies were very high, and now it is stabilizing.
Interesting. So let me then try and talk about the near term before we talk about the medium term, Mr. Kumar. Despite challenges, you did reasonably well in Q4, at least on the top line growth. I think, if I'm not wrong, your revenues grew about 24% in the Q4 of FY18, but margins came under a slight bit of pressure. If that was the scenario when things were not looking all that good, are we to presume that Q1 will indeed see improved performance? Because I did hear you say that both May and the month of June have looked a lot better than what the month of April was looking like.
See, if you take the feed sector, the raw material which are commodities, the prices have increased. See, our sales have grown up, but the raw material prices have increased. You have to take the standard, not 2018-19, but you have to take 2016-17 as a base year. See, last year it was a good monsoon, so previous a good monsoon was there, and last year prices of the raw material were low. So the margins were very high. We got around 20% margin last year. But on average, it is 10 to 15% is the standard margins, what we operate on. Say a good year will get more benefits. But this year, raw materials have come to the same levels of almost 2016-17. So I think it would be the raw materials for the feed also are softening because again the good monsoon has started, and it would be quite interesting. It is and raw materials are coming down.
Seem to be suggesting, Mr. Kumar, that we will see some impact. I'm not putting a number in your mouth, but you seem to be suggesting that there will be some impact that we'll see in Q1 itself.
Q1, yes, there is an impact on the raw material because the raw material prices have increased. Yes.
Oh,
definitely.
Sorry, you are saying that there could be a further margin impact in Q1 or downside?
Q1, it will be almost same. Around we'll be around 12% margin. Okay. Yeah, 12 to 15%.
Okay. Now, you know, Samit Sarkar, my colleague who tracks your company very closely, made some interesting points about what the way ahead could be like. You and other companies or your peers are all increasing your focus on other global markets as well, I presume, to reduce the dependence from the US. What is that current exposure, and how will it move over the course of the next 12 to 24 odd months?
The US market is the major market for the Indian shrimps, which is approximately around 60%. And comes European markets, and now the Chinese market is improving a lot because the Chinese earlier they used to export, and now they become net importers. And the Chinese import of shrimps shrimp is very high. Requirement is very high. The Chinese market is a new market for India, Earlier, India was exporting to Vietnam, and they were reprocessing and exporting to China. But now China has become one of the major markets for India, and also the other Middle East and other markets are also opening up.
Okay. So what does all of this do for FY19? There is an ICICI Securities report, Mr. Kumar, which cites that your numbers, FY19, the bottom line numbers, because of margins or otherwise, could actually show a bit of a downtick before it starts moving up again. Is this a correct estimate?
Yes. Because FY19 closing, there'll be a slight. I think because the prices they have to be adjusted, and also last year, if you take even last year, the prices were very high. They are getting adjusted because shrimp price compared to other meats, shrimp was very high. Now it has been being adjusted, and the consumption is going up.
Yeah.
So the requirements demand will be more, and definitely there will be some slight reduce in the margins, and then it will increase.
Okay, so you are saying that the top line growth will be there because of the higher demand, but the margin impact will be felt on the bottom line, and therefore FY19 profits will be lower than FY18 profits.
Yes.
Okay. Fair call. One last question, Mr. Kumar. Any kind of equity market fundraise that you would need to consider at all over the course of the next 12 months?
Right now, we are not anticipating anything because we are doing all our expansions, and all our requirements are met with the internal accruals, and we are comfortable without going for virtual market.
So no expansion plans. Is that because your capacity utilization levels are not optimal right now? You have a chance to increase the capacity utilization?
No, we have completed our expansion right just now. Like in March, we have completed a feed plant expansion, which has added another 175,000 tons. And last year, August, we commenced a new processing plant, which is around 15,000 tons per annum capacity, which completed last year, 2017 August. And 2018 March, of a new feed plant has commenced. And we have put up some additional capacity in-house, so that anything requirement can do within that.
So what's the utilization levels currently, Mr. Kumar?
The feed on the feed side, we are operating around 90%.
90%. Okay.
And on the processing side, we are around 60 to 65%.